Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at the overall market update, take a look at all of companies outside of commodities to see what's going on there. It's always good to know what's going on outside of the commodity complex because you can't just be focused on the little things that you're invested in. You want to focus and look at everything as a whole to see what's getting impacted. Is selling off? Because we've had a massive sell-off in everything the past two trading sessions. Now, am I afraid? No, I'm not afraid. I'm actually pretty excited. Hopefully it falls some more. And I can, obviously, my account is going down with it, just like everyone else's. And what I focus on is I want to get cheaper shares. I'm still making money. I still have income. I'm still cost averaging in. So I'm going to continue to buy things when they're cheap. If the opportunity is there, you pick them up. That's just what the market's going to do. I can't determine what the market's going to do. But what I can control is if the market's going to give me opportunities, I take them. That's just what I do. So that's been my viewpoint. So let's dive in here. We'll take a look at what's going on outside of the commodity area and do an overall kind of market. And I'm going to look at kind of the overall indexes and stuff like that. Again, just to look at, go over our market conditions real quick. We've got a strengthening dollar in the short term. We've got a 10-year yield that has been strengthening over time. And usually those two are not good for stocks and bonds. So we're seeing bonds breaking down and breaking out of its support area to the downside. That's exactly what we are expecting in a commodity bull market is an increase in yields because of inflation. The increasing yields rotates money out of bonds, and bonds prices are going down. And that money is going to be fuel for our commodity and precious metals investments over time. But this is going to have to sustain for a little while. It can't just be a blip. We got to get all this money to start to rotate, and it just takes time. It takes approvals by managers at money managers. It takes all this stuff for that money to basically rotate over. Looking at the CRB index, just to show you a quick CRB index. We've broken out of this pattern to the upside, and we're doing a little bit of a retest move. We'll see if this holds or if we have a further pullback. But right now, commodities still look excellent. And gold still looks good, and it's just doing perhaps a retest move, and we've got support underneath this all over the place. Now, looking at the overall market, we're going to start with the S&P 500. I'll get there. Here it is. This is SPX. It's gotten some monster sell-offs the past 2 days for an index, the S&P 500. Here's these two massive sell-off days. Money is rotating out. It does look to me that this is a topping pattern and that this could potentially go lower. It could impact, and it has impacted our commodities. It's grabbing us and pulling us lower. And I've talked about this before that in market sell-offs, the overall indexes could pull us lower for a short time. It's like the liquidation events. When people start selling, sometimes they sell indiscriminately. They just sell everything. And that's why our dollar is getting stronger, because people are converting it into dollars. So I think that this could potentially head lower still. We'll see. You can see where the support line is here at about 4160 or so. And we could head lower. And this could have an impact on our commodities and drag us lower, which could be a good thing if you are a buyer of commodities. This is the U.S. Composite Index, IXIC. This is also heading lower. Watch out for a move that breaks this. It means that we are in a downtrend, which we are. We've got a low here. We've got a low. This is a lower high, a lower low. It tried popping back, and we'll see if we break down here. We could have a larger down move right in front of us. And it's going to be selling bonds and stocks. And then that money is going to rotate into commodities, but it could drag us lower in the very short term. So be patient. And I'm a buyer. That's what I'm doing. I'm buying when I see the commodity area firm up. Chipotle heading lower. Looks like it couldn't break out. We've got Apple that's heading lower, and it's with pretty good momentum as well. Amazon, it's also heading lower. It is below its pattern. So this does look a little bit weak. We've got Facebook heading lower. We break out of this line, we could see another large move lower. Google heading lower. That one's broken its support line here just recently. This does not look good for the tech companies. There's your support line. Breaking to the downside. Again, this is a big topping pattern. This is what a top looks like. It takes time. And then you start breaking your structures underneath it, your support lines. So this looks like we could head lower. And it could, the overall markets, with increasing interest rates, these tech companies are going to get kind of weak. And it could drag our commodities lower. So just keep that in mind and be patient. Baidu, lower. Visa is also lower. And I think this will start to blow to the downside. We've got MasterCard. That's also lower, but it still looks okay. The trade desk heading lower, and we'll see if it runs into this blue trend line and if it holds eventually. Roku looks like it's playing with its trend line. This thing's also had a massive pullback all the way from a peak of $482 down to $100. And EEM is still struggling as well. Emerging markets. Real estate, looking at some of the real estate companies, they're also struggling. They're selling off here. Will we find some support here? We'll find out. There it is on the long-term support line. This is a massive line, guys. That's massive. We'll see if it holds. This, I do think, will go up because we have to build a lot more homes. Now, will these builders make more money? I don't know, because your input costs they're just skyrocketing, and supply chain problems and all these issues. So I think we're in a housing boom, but the builders may not make a bunch more money. They might not be as profitable as other times. Heading lower here for MDC. We've got Meritage Homes Corporation. I'll put it on log. We've broken out, and this could be a retest move where we launch higher. This could just be a retest move on a long-term basis. TriPoint Homes still doing a return move. We've got Cavco Industries, another one that's still in an uptrend on a logarithmic perspective. Skyline Champion Corporation. We've got this nice, good support line. Looks like it's trying to, well, let's go to the dailies. It's just below its long-term support line. Legacy Housing. This is just it looks like we broke the uptrend here. Lennar Corp, on a big long-term perspective, has broken out of its pattern, and it's doing a retest move. This actually looks really bullish to me on a long-term perspective. XHB has broken to the upside. It's doing its return move right now. Then we'll head on up for probably 10 years. Now, is it, you could diversify out and buy some of this stuff, but I don't think it has the leverage like energy does in uranium and oil and natural gas. But they do you can get good returns over here once this move is all the way done with. HOV, this guy's still pulling back. We've had some pretty good sell-offs here recently. Let me get off of log. But we're coming to a support line at $35. So maybe that's a spot to take a look at a potential purchase at 35 if it slows down the momentum. Toll Brothers, this one's also doing a return move. Sometimes they accentuate past. We'll see. But we had an original breakout. Now looks like it's trying to find support right where it's at. And then LGI Homes, this is a big builder down south. We could come all the way back down to $60 at the bottom of this trend line. And that would be a really good buy point, to be honest. It'd be a very good buy point in this expanding wedge. So 60-something dollars would be, and it's going to take some time. It'll take some time. I think we still have pullbacks left in all this. So, yeah, that's what I've got there. So looking at this, the overall markets look really weak. The S&P 500, NASDAQ, stuff like that. Some of the tech companies, the individual companies, they look weak, and we could have a further pullback. The housing market, the real estate, home builders, they also look like they're pulling back still. I don't see clear bottoms, but some of them have broken out of very large patterns. They're doing return moves, retest moves. And once they're done retesting, I bet you they're going to run for a pretty long time. Is that a great spot to be? Depends how much leverage you want. Leverage also means volatility. Usually the higher leverage stuff is a lot more volatile in the energy sector, and that's usually where I hang out. I like the volatility. I don't like the volatility. I should say I can put up with the volatility because I want the returns. And volatility isn't risk. It's just volatility. But still need some more time for real estate. I think the entire market may pull back for a little bit. Is it going to be a huge pullback? It's tough to say. It's tough to say. The momentum's there. The selling pressure's there at the current moment, and we have to see what the buyers do. But right now, it's looking quite strong for the selling pressure. All right, guys, give me a thumb up for the content. Subscribe to the channel if you haven't already. Sign up to the website, Platinum membership, Finding Value. It's finding-value.com. If you guys need help, I do a lot of this analysis. The companies that look really good, I share with everybody on the ones that I'm buying, what I'm looking at. You can see exactly the moves that I'm making. Some of those moves are good decisions. And remember, I'm playing the statistical probabilities. I'm finding the best sectors. I'm finding the right market conditions for those sectors. And anything that's ripe for a big move to the upside, I start to position it. I'm a long-term holder in these companies, and the short-term movements don't really faze me. You just have to ride through it. It's a long plane ride. It's ultra boring, and sometimes it gets scary. You hit some air pockets up there, and it shakes the plane all over the place. It's trying to shake you off your game. Don't get shaken off your game. Just hold on and accumulate when things are down. All right, guys. We'll catch you later. This is Finding Value.